Hey, I'm Arran from First to Notify, and today we're going to be talking about technical analysis in crypto. The basis of technical analysis within cryptocurrencies is using past data and volume data to then enable us to work out what's going to happen in the future of the market. This could be price changes, this could be certain patterns, but it's things that have happened before that we're able to then use to try and make some sort of estimate as what's going to happen next. And this is how you can then place crypto trades. Today we're going to be using Bitcoin as an example as we go through, but of course, due to its high volatility and decentralized nature, this can be used among any cryptocurrencies out there. The reason we trade cryptocurrencies and day traders will trade them is because of the high volatility that enables you to make the gains on the way up and on the way down, which can happen all in a matter of hours. So today we're going to go over a few different types of technical analysis that I will use when day or swing trading crypto. So we'll start with something very, very basic and one of the fundamentals of technical analysis, and that is the moving average. And effectively what this does is you look at the average price point of said crypto over a period of time. So let's say we were to take 5 days and you saw some ups and downs or peaks and troughs. You'd take a look at what the average price has been throughout the last 5 days. Now, this isn't taking news into account or anything like that. It's purely going off what the charts are showing. And what you can do from that is you can see at the point where the average lies over the last 5, 10 days, or even 20 to 30 minutes. And from that, you can find a good entry and exit point. For example, if you see it far below what is the average over the last 5 days, this could be an indicator that it's a good time to enter. And that would be an enter in a long. And as it goes up past the moving average, you could then think, oh, a good time to short or close your long position. Now, this is super basic, but it will come into ones that we use later and is a good fundamental to get your understanding of cryptocurrency trading. So next we have a slightly more complicated tool, but still one that's super useful. And this is called the relative strength index. And what this is a momentum oscillator which gauges the rapidity on the variety of price changes. Effectively what it can tell you is whether something's being overbought or oversold. And from that, you can then predict what's going to happen. So next we have one that actually ties in with the moving average that we spoke about earlier. And this one's called Bollinger Bands. Now, effectively what this does is it points out 2 points below the moving average and 2 points above. And in general, this should indicate your trading ranges. So as you see the crypto reach those 2 bottom points, that indicates a buy. And as it reaches the 2 top points, that indicates a sell or a short position. And okay, this isn't always accurate. There are things that goes outside of that, but it's a great addition to add to the moving average that we spoke about earlier. Next, we have a piece of analysis that's slightly more complicated, and this is called the Ichimoku cloud. Now, I can do a full video on this if you'd like more in-depth analysis. However, to give a brief overview, it's a far more intricate indication which is made up of several lines and parts, and ideally it will spot trends and points of resistance and support. So the idea is to be more accurate than the above points we've already spoken about. But again, if you'd like me to do a full video on this, I certainly can. Next, we have another version of the moving average, which includes the convergence and divergence. Now, this is a momentum indicator, and it has 2 lines which sponsor trends and momentum. These lines consist of the MACD and the signal line. Again, I can go into further detail if needed. Next, we have the Fibonacci retracements. Now, these are based on the important Fibonacci ratios. And effectively, this is a piece of technical analysis that enables you to find probable points in both the support lines and the resistance levels. So you can see where they're about to break these levels and then make a new trend down or up. Of course, as we explained, do not just use one of these. No individual indicator is enough to go off. You need to use a variety of these together. And using a variety, you then have more indication as to where the market's going to go. But of course, please do your own research. Look into news as well, as that can completely affect the charts compared to what history's done. And just always, when trading crypto, be safe. And of course, only use money you can afford to lose. Cheers. I've been Arran from First to Notify. See ya.